Hi, I'm Brett Thornett from Applied Education. Today I'm talking about balance sheet basics, just to give you a basic understanding of how a balance sheet works. So first thing to look at is what actually appears on a balance sheet report. And here's our basic formula. So we've got assets, what the business owns. We've got liabilities, what the business owes, and then that is equal to our equity. But let's forget business for a while. Let's talk about owning your own home. So if you're owning your own home, the asset in this case here is your home. And let's say your home is worth $600,000, or you buy it for $600,000. The liability is what you owe the bank. The difference between the two is the equity that you have in your property. And at any point in time, that equation is always going to balance. Let's say that instead of 400, you only owed 300,000 to your bank. What that means is your equity has gone up to 300. Let's say you still owe 400, but the value of the property goes up to 800. That means if your property is worth 800, you owe 400, equity would go up to 400,000. And the same principles that I've been through on this house would apply to a business. The only difference is that instead of being the asset being your home, here's the assets in a typical business. This is just a mob chart of accounts. So our assets here is what we've got in our bank account. It's what we've got in inventory. It's what our customers owe us. That's our trade debtors figures. We've also got, as you can see further down, we've got some fixed assets. So the assets at the bottom, these furniture and fittings, the plant and equipment, motor vehicles, they're called fixed assets. And those fixed assets are assets that we're going to be keeping for more than 12 months. Compare that up the top with our current assets. Our current assets are either cash or something that will probably be converted into cash within a 12-month period. So there's the assets of a typical business. Let's have a look at liabilities. So in our liabilities for this business here, we've got a few credit cards, as you can see. Under the payroll liabilities, we owe some PAYG to the tax office. We owe some superannuation. We've got some creditors in there. You might also have bank loans in there, and you might have other obligations to the tax office, such as GST or income tax type liabilities. And the difference between assets and liabilities will be the equity. So the equity might be retained earnings, it might be the current year type earnings. Now, in small business, that's normally how it would be displayed if you were to run a balance sheet report. But in a large business, I'm talking about large proprietary companies with a turnover of more than 2 million, or perhaps somebody that's listed on the stock exchange. These business types need to apply accounting standards. And when you've got accounting standards, the balance sheet is far more condensed. So you can see here, instead of having all those cash and equivalents listed out, they're totaled. And the detail is contained in the note to the account. Then you've got trade and other receivables. You've got your inventories, and then any other current assets down there. Again, current assets are converted into cash within 12 months. Non-current assets, the assets that you see down here, are kept for the longer term. So we've got some property, plant and equipment, an intangible asset, and other non-current assets. So we've got total assets there of 19.3 million. Similarly, liabilities, they're grouped between our current liabilities and our non-current liabilities into the headings that you see on screen. So we've got trade and other payables here, and the breakdown can be found in note 11B. we've got some deferred income, we've got borrowings, we've also got some finance leases in there. And if you did want to find out the details of those liabilities, you can go to this note here. And we've also got provisions down here. We've got non-current liabilities, including our trade payables, deferred income, provisions, and so forth. So we've got total liabilities of 10.9. We've got net assets of 8.4 million, which in turn equals our equity. So that gives you a very basic overview of how a balance sheet works. If you wanted to go into more detail, we do offer Cert 4 in bookkeeping courses. We also offer Cert 4 accounting, diploma, advanced diploma of accounting, to take you right through from small business in Cert 4 right through to large business, including publicly listed companies in the advanced diploma. Thanks for watching.